Welcome back, everybody. We've got a special guest episode today for the Up Token. Some of the Up Token team members are here. These guys have been working hard. Bunch of math nerds, bunch of geniuses. It's always the quiet ones, that are building the craziest stuff. And they've been around for, a year and a half almost since like PulseChain was launched. And how I would describe you guys is basically a suite of automated DeFi strategies that basically can crowdsource PLS together and give it back to the people if they want to invest it in all these various methods. So let's introduce both of you guys and just talk about what you've been working on.
Anna, you go first, sir. Or I'll go first. All right, my name's Dave. He's on mute. He doesn't even know he's on mute. But anyway, my name's Dave. I'm part of the Up Token community. We have Up and UpX tokens. Those are our two tokens, but we probably have 3 or 4 other things you need to know about. And so we build protocols. But the 2 tokens we have are Up and UpX. I've been in crypto for a while now. Haunted called me one night when we were on PulseChain's, PulseChain.com prior to the launch, and he was like, he had this idea. Called me up. I get this phone call from Australia. It's like, who in the hell is this? I don't know anybody in Australia. Answer the phone, and he goes, I need you to check some math for me. Who are you, buddy? It's like, I'm Haunted. Got the strategy. So we connected. We started working together on a couple projects, and from there, Haunted is he's just grown this thing into something very special. So Up and UpX, those are our 2 tokens. They helped us build the treasury, and then with that treasury, we're bringing it back to the people and just doing the best we can for PulseChain. Haunted, your turn, brother.
Yes, how are we, gentlemen? I started off with helping liquid loans, and I created the Haunted strategy, and then from the Haunted strategy, we turned it into we tokenized it in a way, you could say, and now we have Up and UpX. And yes, I did call Dave to confirm the numbers because I couldn't believe my eyes. So he went and ran the numbers, and I'm sure he couldn't believe his eyes. And we kept on running it. And now that we've actually grown from vaults to also adding perpetual buy and burns and more perpetual buy and burns for Pulse and for Up and UpX. We've become validators on the PulseChain network, helping the network as well. So we're growing, and we're still growing from there.
Yeah, so just to give people that are listening some background, liquid loans, if people don't know, this is a liquidity fork protocol. It's a stable coin that you can mint using your Pulse. You could also recompound it. You could stake the stable coin and earn yield in the loan token. You can stake the loan token. It's just a way for people to basically take out zero interest loans in a DeFi trustless manner. You've also got the Flex protocol and the Earn protocol. They're basically all copies of the same protocol. One of them uses PLS as collateral, one uses Hex, and one uses PulseX as collateral. So if you have PLS, you can mint stable coins backed by your PLS. Just make sure you understand what the protocol actually does. The Haunted strategy, and you can correct me if I'm wrong at any point along the way, but this was invented by you, Haunted, and it basically relies on, the price of Pulse. If it goes up, the strategy is such that you can keep on, extracting out a little bit more US dollars, putting that to work and earning yield. Now, this might be too complicated for some people, or some people just don't want to care about this. So like you said, you basically tokenized the Haunted strategy with Up token. As far as I am aware, whatever sacrifice was raised many months ago, none of that's actually going to developers or marketing or anything. It's all simply going into DeFi strategies that other people can essentially buy into and benefit from that with the Up and UpX token. So it's not only the liquid loans Haunted strategy, you've also now got the validators. So a lot of that original Pulse is now stuck in validators. And if you don't want to run a PulseChain validator by yourself, you can mint, the liquid staking derivative token that you guys have just created. And you've got a lot of cool things in the pipeline too. These are the 2 big ones for now, but it's also going to be, there's going to be some cool additional strategies in the near future. It's hard to keep up. When this first started, it was only liquid loans and automating that strategy. Now you've got like a loan alarm bot, which I've used a lot to keep track of my own liquid loans. It's like a Telegram bot that tells you if you're close to being liquidated or redeemed against. And that's just nice to have as well. But I mean, there's a whole suite of things, and maybe we should go over them And when we pull them up on the screen, it'll make more sense.
Um,
How would you describe UP and UPX token in simple terms?
in simple terms, there's a send and receive token, and with a burn function, and that's it. You come, you buy, you hold. You don't even have to worry about all this other stuff, right? It's a simple send and receive token with a burn function. And then people are going to come, and people are building on top of this to create more buy and burns. So imagine BW's benevolent wallet sitting out there saying, okay, I want to create ValidatorX and use a portion of the fees that we collect to buy and burn up and UPX. Let's build a something for liquidity and then add to buy and burn up and UPX. This is just an examples, right? We can keep building forever and create buy and burns for up and UPX. And that's the main thing. And when you're talking about the liquid loans haunted strategy, there's also strategies of buying the dip, and there's also strategies of when the token moves sideways. So there's a lot of things there. In the back end, it is complicated. In the front end, you just buy and hold the token. It's that simple.
Yeah, well, I think part of the big mystery here about liquid loans and earn protocol and all of these 0% interest lending protocols, that is an amazing superpower that only the wealthy ever had access to. You and I couldn't go to the bank and get a 0% interest loan. Never going to happen. But the wealthy, they got them all the time. They'd go to some government agency and say, hey, we want to borrow at 0% and go build the economy of America or something. Well, that opportunity now exists for everybody in blockchain, especially on PulseChain. We have, 3 different collaterals you can use to get a 0% interest loan right now. And that is not something you should throw away and say, oh, that's only something the whales get to play with. That is something that Richard's brought to the people, along with the people building on PulseChain. He's given us that freedom of low transaction fees where you can actually afford to go do something, and 0% interest loan. But the problem is there was a barrier to entry on liquid loans of $20,000. You had to have, if you wanted to borrow, $2,000, or you have to borrow at least $2,000. Well, that's a barrier to entry. So part of our thesis and part of our manifest is let's give all of the tools of the whales to the common people. So within one of our first things we built was the smart vaults, where you can go and you can get a 0% loan. And you want to borrow $5, you can borrow $5. There's no minimums. So that's the idea of, we want to give all the tools of the whales to the common people. And that's what Up and UPX development team is all about. And we only have 2 tokens. Smart Vaults is not a token. LPX is not a token. ShareX, all the stuff we built, these are our only 2 tokens. They do have dashboards where you can see where the Treasury is being put to work. We collected about $700,000 for Up token. And as you said, it's a community pool kind of an idea. We all put this money in there. We bought some Up token, we sacrificed for the freedom to do whatever the hell you want with your money. That was our freedom call. You get to do what you want with it. And if you gave it to the Up token, that money sits within a big wallet called the benevolent wallet, or the benevolent whale, we call them. And he puts that money to work, and he's using validators. He's using the liquid loans protocol with borrowing and buying. So it's using all of these whale tools to try to push the price of Up token higher, and the same thing with the UPX token.
And so when you're buying Up token, it's basically like you're basically betting that the people controlling this benevolent wallet are just going to keep doing these clever DeFi strategies, and you don't have to worry about doing any of that yourself. You can just leave that to whoever that might be. So I mean, of course, there's going to be counterparty risk here, but I don't think that's, I don't think it's going to rug anytime soon. Let me just put it that way. It's been up for a while, and it's I think it's 5 or 6x off the lows, it seems. But all these strategies, they feed into, as you make the yield, that yield, some of that goes to putting positive price pressure on this token.
Yeah, we take supply and we burn it with some of the yield. And then we have this huge dashboard down here, which shows you where all that money's at. And, we have 714 validators for UPX, and they're getting a yield of about 15.8% right here.
That's a really cool thing too. A lot of people don't want to run their own validators. They want to basically delegate. So you're going to see all these new protocols like Project Pi, Vouch.Run, and now you guys are, I think, the third that, on top of, David Feeder and a couple of other guys that are basically running validators on your behalf. So you do have to trust that, the validators are going to stay up and running. From what I understand, these guys have, over 5 or 6 years of experience running crypto validators, maybe even more than that. So they can, you're basically taking a leap of faith that these guys can run a validator better than you can, but they'll also pay you more yields than you could actually make as an individual, because when you're a bigger player, like when you have billions and billions of Pulse in validators, you actually make yield from minting new blocks as well as fees. And that's why you're able to capture like 15% APY rather than the average, which is about 9 or 10.
Absolutely. I have a validator. I kind of followed David Feeder's script and went in and started a validator when PulseChain launched. And the one in my office is making 10.6% yield. But because we have a collection of validators, those actually get to build the blocks instead of attesting. Because when you're a validator, you have your computer's doing one of two things. It's sitting there attesting the blocks, like, hey, yeah, I agree. That guy who built the block, all of this code running was accurate, and you get paid some of the inflation. But the person who actually builds a block, or the validator that was chosen to build the block, they get the priority fees. So the more blocks you build, the more fees you collect. And so when you have 825 validators like we do with Up and UpX, we get to build a lot of blocks, and so our yield's a little bit higher. And we'll show you here in a minute the ValidatorX. We've been live for a week now, and if you launch our app, you'll come over to this page here, which will launch you to ValidatorX, and you'll see that it's an easy process. You can stake. So I have one in my office that I run personally. It costs me a lot of money to buy the computer and a lot of time setting it up, and I'm getting about 10.6. Whereas over here, you can hit the stake button, confirm it, and you're part of a validator pool, and your yield's actually better than the one in my office.
Now, this is interesting because when you're making yield, right, some of this yield actually gets paid back out to the liquid stakers. You might be earning, 11%, 12%. But then some of that yield, I'm guessing, is also going to buying and burning UpX. Is that right?
No, that would be your yield. So the fees is 9%, the lowest fees on PulseChain. Some of that goes to buying and burning UpX. And also, just so you know, that our dev has been doing validating since 2017. So he's been validating for a very long time, and he's validating on 13 chains in total at this point. So he's been doing it for a long time, and he's on a lot of chains.
Yeah, I'll do a little bit of math for your free community here and those watching us. I did we launched this on Monday of this week, so it's been 3 days, 4 days, whatever it's been. So if you I put 1 million tokens in there, and you can see that the million Pulse already earned 1,043 Pulse, and if you do the quick math on that, that came out to it's about 12% right now is what I'm getting on this validator. The one in my office that I'm running is getting about 10.6%. And why is that? Well, because this validator over here, the ValidatorX, we have 233 validators going. And so we're building more blocks. The more blocks you build, the better your yield is going to be. And so, it's a simple game. I can put in 1,000 here or 1 million. And that's the other thing. We don't have a minimum deposit. Yeah, that's only 100,000. I can deposit 100,000 Pulse, hit the stake button. It's going to take me over to the confirm. At some point, it'll take me over to confirm, or it won't. How's that work? Always, right? On maybe anytime you're live streaming and you're doing something like this, let me switch to a different wallet and see if the problem pops up. It worked 5 seconds ago, right? Go ahead, Haunted. Tell them all about what we got going on here while I switch wallets.
ValidatorX. We built the protocol so people can come and stake. I personally wanted to become a validator, but I don't have the expertise or the place or the proper internet to run a validator. And getting liquid through ValidatorX, it's one thing is making it easy for me. Literally one click and you become a validator. And number two, I'm also liquid, so I can use those tokens and try to maybe earn extra yield if I wanted to, like pairing it with Pulse in LP. So that it's giving me more of a use case and giving me better yield.
Yeah, that's my number one issue as well with when it comes to running a validator. the internet and just the power needs to stay on the whole time. So I live in a place, maybe the power goes out sometimes, and I need to either buy a backup battery and do all this complicated stuff, or delegate. I mean, ultimately, if you run your own validator, that's the best thing you could do to secure the network. But if you look at Ethereum, for example, there's all kinds of liquid staking derivatives such as this, and it looks like this one's making quite a bit more than average APY. Where did you say the fees come into play? Is that just whenever you stake, is there a fee?
No, there's no fee when you stake. So there's a fee on the yield. So the pulse that you earn, there's a fee on that, and that's 9%. That's how minimal it is. So yeah, so if you earn 100 pulse, 9 pulse is the yield. Sorry, is the fee. 9 pulse is the fee.
And the fee then still buys and burns upex or up token, right?
Some of that, 5% of that will buy and burn upex. So it's small, it's minimal, but then it grows to 10% once we have over 500 validators, and then when it grows over 900 validators, it goes to 15%, and then it'll grow on after that. We'll give you the numbers after that.
Interesting.
Yeah. The way it works is we got these validators, and the way PulseChain works is every 8 hours they send the fees out to the wallets. So it's like, okay, these wallets earn some fees. Okay, now it's time to send those out, and they send them out. So as we collect all the fees for our validators, 9% of that gets scraped off for, utility costs, internet, as you said, running the validators. And then the 91% of the yield comes back to the stakers that are in the protocol. Now here's a second bonus. And I don't know, maybe I'm getting too deep into math here, but our validators are compounding. And so as soon as we earn another 32 million in yield, let's say we get paid that 8 hours and it's another 32 million worth, we'll start another validator right then. And so the actual yield comes out to more like 94%. You're actually collecting 94% of the yield because we're compounding and your pulse goes back to work. Whereas the one in my office, it's going to take me 7 years before it earns 32 million. So I can start a second validator. So it's going to be a while before I get to compound. So all that pulse is just sitting in my, withdrawal wallet over there, and it's waiting to get restaked. But over here, it would get staked right away, and that money starts working for me. And so, because of the compounding, the yield actually turns out to be, we say we're taking 9%, but it ends up being you're actually earning about 94% of the yield because of the compounding.
Yeah, that's good. What happens if too many people try to unstake at the same time?
Yeah, I'm going to hit a little plus sign right here for you. So in this tag, we have instant withdrawal. So if you're trying to withdraw just say 21 million pulse, it's instant. It goes into your wallet. Now, if you ask to withdraw, say 100 million, well, now we got to go shut down a couple validators. And so we'll put that request in instantly. And then the way that works is we end up in a queue over there on the launch pad. And then as soon as, the launch pad goes through and releases the 2 validators worth of pulse, then we will send that pulse to your wallet and you'll hit withdraw.
Interesting. Well, good.
Yeah, we are at the mercy of PulseChain.
Right. Well, yeah, I mean, you can never control what the users are going to do, but at least there's a system in place there.
Yes, absolutely. And you can look at this if you want instant withdrawals, like, oh shit, there's a new shiny object out there. I need 10 million pulse. Come over here, pull 10 million of your pulse back out and go buy the new shiny object if that's the game you want to play.
Very nice. Very nice. I mean, this is pretty easy for me to understand. I hope the audience is able to understand this as well. Pooled validators, not everybody wants to run their own, but you guys are able to earn more yield by running higher quantities and minting more blocks than, the average individual user. So instead of 10%, you earn 12%. 9% of that 12% goes to buy and burn or dev fees, upkeep costs. Fees.
And then a small piece of that will get shaved off for buy and burn. Now, I do want to explain this UPulse, if you don't mind. I mean, I don't want to get too technical for everybody. I staked 100,000, and you'll see that I didn't get 100,000 UPulse. And these are, I call the U the unstake pulse, because these are in your wallet, and you can take those at any point in time. You hit the unstake button, and you can unstake your pulse and get your pulse back. But why didn't I get 100,000? And that's because the yield keeps growing in here, and you'll see that each U pulse is now not one pulse anymore. So it's already building a yield. They're stacking yield over here. Your pulse is growing. So one U pulse is now worth, 1.001, and so as the yield comes in, this number keeps ticking higher. And so,
and at the end of the year, it'd be like 1.12.
Yeah, something like, yeah, exactly. You would pull out 1.12 worth of Pulse. That's the way that would work. And so at some point, we may be able to borrow against uPulse. And so you're putting an asset into a lending protocol that allows you to borrow against a token that's working for you. It would be a beautiful thing if we get to the point where your collateral is working for you and you can still use it as an asset to borrow against.
Right. Well, I think, there's things on Ethereum like Aave and other protocols allow you to borrow against staked ETH. So
yes,
why not?
Exactly. So yeah, it's called capital efficiency. You want your money working for you. I mean, that's how the wealthy got wealthy. They don't sit with, millions of dollars sitting in a bank getting, 0.3% interest. They got that money working for them somehow. And even if they just put it up as collateral and borrow against it, take the new funds and go do something. But that's what Up and Up X are all about. It's trying to take and give the tools the whales use to the common people.
Yep. Democratizing these more advanced strategies. Can you explain the difference between Up and UpX more specifically?
That's Haunted's turn.
Haunted, you're on mute, bro, Chacho.
Yeah, I know. Sorry.
He's there.
Sorry.
Up and UpX, difference. Okay, I'll take over then. He may have a technical to do. We launched Up Token before PulseChain launched, and we raised about $700,000. And it was $695,000 worth of sacrifice, and we've taken that. We brought it over. We were the first DAI across the bridge. In fact, that's how we discovered that PulseChain V1 had an error in it. We were the team that discovered the gas fee error. And we were in talk with Richard's devs. We said, hey, we got a problem over here because, the people providing LP are not getting gas fees. And it took us some time to convince them, but they finally said, oh, yeah, you're right. And that's why we have PulseX V2. Okay, so they fixed that. But yeah, we brought the DAI across. We were in liquidity pools, and we're trying to put that money to work. And then what do we do with that money? We take a portion of it. We buy and burn the Up token. Then there were a lot of people like, well, hey, we want another token because we want to use Power City's lending protocol. We want Honda strategy over here using this. Can we have another one? So we had a second sacrifice, and that was about a year ago. And we sacrificed, and you traded one Pulse for one UpX. That was the minting phase. You just, trade a Pulse, you get an UpX. And currently that one Pulse is now worth 4 Pulse because, we have done very well with the Treasury. We raised about 36 billion Pulse here, and we've put that to work, and it's making, we now have 50 Pulse between the two. We have 825 validators running between the two. All of that validator yield is going to building more because we believe in compounding. You see it says collateral compounding, the first couple words on both of these. We want to take that Treasury and we want it to grow. We want that 50 billion to turn into 100 billion Pulse. We want to see it grow. And at the same point in time, we shave off a portion of the growth, and we go and buy and burn the Up and the UpX tokens. They're finite supply. Haunted bought his tokens. I bought my tokens. There's no founders tokens out there. Nobody's dumping on your head other than somebody who bought. They thought a 2X was big enough and they dumped. Or, the people over in, UpX has very little volume in terms of sell pressure as well as Up. There people are just stacking these because they are part of a huge Treasury. It's kind of like if you got into, Berkshire Hathaway early on. It's like you see this guy and it's like, oh man, he's got some money and he's making the right freaking decisions. You say, how do I get part of that? And that's kind of what Up and UpX are.
So UpX was just relaunched for new different strategies. They're not really, are they related to each other in any way?
They have bonded liquidity, but yeah, they're both running the same strategies. I think UpX has 700 validators because it was a bigger sacrifice. Up has 111 validators, those smaller pool of people here. I think we have 2,000 and something holders of Up. We have about 3,000 something holders of UpX. But basically, the synthesis is the same. We just want the projects to get larger in terms of their treasury so that they can buy and burn more tokens. And we've done some spreadsheet math. And if Pulse can get to a 20x sack rate, the buy and burns for these tokens is millions of dollars worth of buy and burn. Because we are sitting on 50 billion.
Some people call them almost like leverage on Pulse. If Pulse does well, these do extremely well.
Yeah, they're
and right now, is Is this coming from primarily, the validators, it's such a small fee going to the buy and burn. So most of the buy and burn is coming from liquid loans today?
No. Actually, here, I'm going to take you over to the validator yield. So this month alone, you can see we have a tab for this. We have burned 100 million upex tokens with about 257 million pulse from the validators. And then we have another 47 million pulse that are building new validators. You see another 24 million and we'll build a new validator because our validators just keep clicking along. They're just they're growing. And when you're making 15% yield, we're projected to make around 3 billion pulse this year in yield. And 40% of that goes to building new validators. 40% will go to buying and burning the token. And this is the up chart. I mean, we also have a similar chart for the up token. This is UpX, I'm sorry.
I thought there was a lot smaller percentage going to buy and burn with the validators.
Oh, okay. There's the confusion.
Yeah.
These are validators ran with our Treasury, as opposed to the people over here in ValidatorX. There's only 233 validators. We're not taking the fees from these people. These people get to keep their fees.
I see.
Yeah, we're just taking 9% of the yield from this group of people. We built this for the people. It's not for, we got to pay the utility bills. And the yield you're getting over here is far better than some of the other liquid staking protocols you're going to find on any chain anywhere. I don't think there's a liquid staking token out there paying you 12% anywhere.
Okay. So with this one, you get all the yield.
Yeah. The people participating here, we want you to be rich. We want you to have that money. We're not trying to take it from you.
Yeah, so ValidatorX is just 9% on the yield. And with the other validators that Dave was talking about, the BW and BWX, that's going back to buy and burn. So 40% of it goes to buy and burn, 40% goes to compound, and 20% is for the fees, just to keep the system going. So there are two different systems, but they're both being validators. So the BW and BWX are utilizing their pulse instead of just sitting there doing nothing and not growing. It's utilizing the pulse and growing more pulse, having more pulse over time, and also creating more buy and burn. And we've noticed that it's changed how the tokens are going or performing because of that perpetual buy and burn. The perpetual buy and burn is, if you look at the chart and you look at ever since we launched the validators for the BW and BWX of benevolent wallets, you can see that it's changing the price. Like it's sort of adding liquidity when you buy. It just continuously buys every 8 hours. Every 8 hours, there's always a buy pressure there. So that's what the difference are between the validators for the BW and BWX and the ValidatorX. That's for the community. That's more for the community.
Yeah, we had two sacrifices, so there's two treasuries. And like this wallet here, we have a vault that's got 6 billion Pulse in it. And you can see we've already borrowed $339,000 on that. Now, when Pulse does a 10x, now we got more money we can borrow against. And then down here, we have a second vault that has 3.7 billion in it. We borrowed $189,000 from that one. And as Pulse price starts ticking up, we borrow more money. We buy and burn. We grow the treasury. Because what are we doing with all these funds that we're minting? 62% of it goes to buying more Pulse. So we are probably one of the biggest eaters of Pulse on PulseChain. We love buying Pulse and stacking more in these are the Honda strategy vaults. And as soon as it gets to 800% interest, we borrow more. And so we are the buy and burns. If we can do a 20x on PulseChain, shit. The amount of money we're going to borrow and buy Pulse with and buy and burn tokens with, our tokens they're destined for this right here. We're going to be on fire.
It all just relies on Pulse going up.
Yeah, can you make that happen for us, Coffee? Can you talk to Richard?
I'm
Come
trying.
on, reach out to Richard, make that shit happen.
David, maybe talk about the virtually aligned powerhouse that we're building here.
Yeah, because the idea is we want you to be able to borrow, and we want you to be able to make a yield. We want you to be able to take your assets and go out into the real world and use them. How good is this paper money we got here? It's like, okay, well, that's fine and dandy, but we want you to be able to have access to the real world with this. So we have a protocol coming up called OwnX, where you can take your crypto and you're going to be able to use that to go out and acquire real world assets. That's This is not just we have a shiny token over here, you should buy our token. We've got a system over here, an entire vertically aligned ecosystem where you can leverage, you can borrow, and you can go buy, and you just watch your asset grow. And we're trying, like I said, we want the whole entire world, that Wall Street bull market, access for the common people. And Richard built the Freedom Chain with these low fees, and we're trying to make sure that the world finds us and they're able to use these tokens. Because why would you go use a validator if somebody's going to eat, 70% of your yield? That doesn't help you. Nope. Come over here and you're going to get all your yield. You get 91. And once you compound, it's like 94% of the yield is yours. And then we want you to be able to jump into the LPX, which we haven't talked much about, but we have this protocol called the LPX, which allows you to join the market maker movement, where the whales are all market makers. This is where the whales make their money. There's some whales validating, but what do they do with their money? They're providing liquidity, and they're scraping yield from every transaction out there. They're getting a piece of it. And we want you to have access to this. So we're currently in development with LPX, and we're going to bring that to market here within probably the next month.
Yeah, really cool stuff in the pipeline. Whale strategies, whales love being liquidity providers, and it's not that great when all you've got is $1,000. Like, who cares if I'm making 15% APY? But it's also better, typically, I guess, for the average Joe to not have to do all this strategizing themselves. A lot of people just want to go live their life and not keep up to date on what's paying the highest APY, what pools to join, when to exit, and when to enter. I mean, there's all counterparty risk, especially like the real world asset thing too. It's only a matter of time before people start building RWA stuff. So, but the only issue is that there's kind of no way around doing RWAs without having to trust somebody off chain at the end of the day.
Yep.
Yeah, Elon could say something stupid and Tesla stock's going to drop. I mean, we have that in just about every asset. Who was it? Martha Stewart went to prison and all of her stockholders lost like hell. I mean, no matter who you're betting on somebody, right? And I mean, that's just
look at the price of PulseChain when the SEC case came out, right? It's like some of these things you can't predict. It's not like the person is making the price go down, but real world actions happen and then people get scared, and that's just markets.
If someone makes a ChatGPT copy and the video, whatever, I can't remember the stock, tanked because they built it for $10 million versus $100 million. There's a lot of things that the market can drop just because of A, B, and C, right? So you got to trust that whatever you buy, there's always trust in they keep building or being the best out there, right?
If you put your money into like a real estate investment trust, you got to trust that the REIT isn't going to be managed like shit. Like, hopefully this guy has some more experience than I do with real estate, and that it's going to grow.
Absolutely.
And there's always that trust of the OA doesn't sell all the hex and all the liquidity providers that we're the tokens that we're in, people don't remove their liquidity and run. There's always trust everywhere. So you got to pick the project that that you believe in, and grow it and become the liquidity provider and become the people that people trust. So that way, if something does happen, that you've done your part to help on your project. And that's where LPX helps, right? It does help in that sense. It helps the little guy become, or like a bunch of little guys. So let's say, you said that before that, what's $1,000 going to do and what's 15% APR? But if you have 100 or 1,000 guys with $1,000 providing liquidity, now it's more decentralized. And one person can't just go rug it because there's more liquidity and everyone's there. Everyone's in the liquidity for that token.
Yeah, well, we're all betting on Richard to try to make us all rich, right? That's why we're here. I mean, he's like, oh, this is a great idea, Freedom Chain. And we do believe it. We think we should have the onboarding. We look around, it's like, well, why are they gatekeeping this chain? It's such a great chain. And it's like at some point, everybody will come here, and we're early, but we're betting on, this chain being successful. And with the up and the UpX token, you're betting on this benevolent wallet to go out there and just make this, it's a perpetual compounding machine that just keeps bringing yield back to our tokens. And to this point, we've done a phenomenal job, and we're just keep releasing new inventions, or I don't say new innovations like LPX and OwnX. Those are coming so that we can, grow more projects on PulseChain just to get more eyes and do our best to help this chain win.
I I like where your heart's at. And I guess I got a question about up versus UpX. Which one of those tokens is currently has more buy and burn pressure?
UpX has the daily buy and burn pressure. It wins that race right now because it has a bigger treasury, but there's also a bigger token count. So if you want to do percentages, they're probably pretty close to the same. If you want to do dollar value, UpX is a little bit bigger. They're very similar tokens. We have bonded liquidity, so we're not playing the EHEX PHEX game with our tokens. I mean, you want to own both. Why do you want to own both? Well, the liquidities are a little bit different on both. The holders are different on both. And UpToken does get 5% of every loan that UpX takes. So it gets a little, when Pulse runs, Up is going to look very special. If Pulse keeps going sideways a little bit, UpX is going to look special. So,
well, you could just look at both of these charts back in October, December, November 2023 and kind of see it in action, right? Like, yeah, obviously it pumped when PulseChain pumped.
Yeah. Also keep in mind that, for example, UpX has done a 4x now to Pulse. UpToken has done a lot more X's than the other. So there's always there's many ways of looking at it, right? I always say, look, buy both. You don't know which one's going to outperform the other. And
sellers, you don't
know what's going to happen. Pulse starts.
It looks like UpToken. It looks like UpToken's only done a 3x. I mean, only, but like.
Yeah, but we launched from we're on Ethereum. We were on Ethereum before Pulse.
Oh, okay. Yeah.
Yes. Yeah. So and the SAC rate was 2.5 cents.
Yeah. Yeah, the SAC rate was 2.5 cents. So we've 12x'd our SAC rate on UpToken.
We've reached $1. I think we reached $1.20 or $1.15, somewhere up there. It's come back down. We went back up to like 70 cents and come back down. And people are going to sell when the price goes up. People will sell. And eventually, one thing about sellers is sellers can't continuously sell. They can only sell 100% of their bags. And once people are happy at selling at a 20x or whatever the case may be, and you have the rest still holding, the price keeps going up. And if you look at the holders, we haven't got many holders, so to speak, and we still at a 10x. But our holders are holding, and there's still a lot more people that can come in and buy Up and UpX. Just in the PulseChain ecosystem, I like to attract the people outside the ecosystem and come in. That's more beneficial for the whole ecosystem in whole. So I prefer to promote to the Ethereum guys. Hey guys, why hold your ETH when you can come over and buy Pulse and then become a validator and earn 10%, 15% APR? What's going to do more X's in the next 10 years? I believe PulseChain is for versus ETH. So why don't you become a validator and have B liquid staked at the same time? I'd rather push out from outside the community than within the community.
Well, that's what it's all about, getting new money on chain. And yes, I agree. I think PulseChain will do more X's and it'll provide more yield. Like it already is providing more yield today in these various staking derivatives.
Yes, and try to push this out to people out there. Like let people know. Like let's push it out and say, hey guys, look at it. Look what you're getting here. Come over and play. Come over and use these protocols. Even if they use a small portion, let's say the whales, if they use a small portion, and then they start seeing it outperforming, it's a beneficial for them. PulseChain is still new, it's still young, It's still cheap. It's actually very cheap, in my opinion, and the potential of how much it can grow in the next 4 to 8 years will outperform most of the chains, or if not all the chains out there.
I agree. We do have probably the most persistent community in all of crypto, especially surviving all these mainstream media FUD attacks, which really ultimately don't stop you from buying it, don't stop you from selling it, but it's all public perception, and it's only a matter of time before that changes, sooner or later. But when PulseChain first started out, it's kind of always hard to predict who's going to be the projects that continue to innovate and don't just kind of give up and fade into obscurity. So congrats to you guys, just for sticking with this. This project's been up and running ever since the launch of PulseChain. And like you said, you are betting on people at the end of the day, but the fact that you've got so much already built, so much, some gains to show for it, and also some cool stuff in the pipeline, RWAs or democratizing LP strategies. I think it's pretty clear that you guys aren't going to give up. I just wish you the best of luck, and with great power comes great responsibility, but you've done well so far.
Hey, thank you for having us on, Coffee. We really appreciate the opportunity you've given us.
Sure thing.
Up into the X's, we love this. We love PulseChain. We love, we've put all we can to PulseChain. We love building. We want to keep building more if we can. Anything that can, build the ecosystem within the PulseX ecosystem. So if you go to the PulseX.app and go look at all the products that we built, we just keep building things that strengthen the next. And that's what we're going to do. We're trying to build stuff to strengthen the next and make this whole ecosystem even stronger. So we're not looking just to build a product that's gonna, bring in the best yield. But don't look at what brings in the best yield. We look at what's gonna bring in the best, or what's gonna strengthen the ecosystem within that we already have. And
yeah,
for example,
even little things like the loan alarm bot. It's something that I've found very useful. If you go follow @loanalarmbot on Telegram, you can manage your liquid loans positions basically from anywhere. You don't have to always be next to your crypto computer, and you can just manage it via this bot.
Yeah, and that example of loan alarm bot strengthens the use case of and confidence of using liquid loans. And that's the reason why it's there, so people can have a bit more of an understanding. I don't think anyone else has built a loan alarm bot, and we've had that from almost the beginning of the launch of liquid loans. And people have been using it. I've personally been using it, and you can monitor other people's wallets if you wanted to. And just that's how we are. We like to build things that strengthen the things we already have.
Yeah. And so when you look at these up and UpX tokens, they're not so much like, they're basically just pools of money that are being used in smart ways to then rebuy and burn the tokens and provide value back to the user.
You said it perfectly. That's it.
Yeah, I mean, I don't know. There's probably any plans on doing yet another up token.
I'm flying to Australia and shooting Haunted if he does this to me again. It's enough work.
Oh, look, there's in terms of where up and UpX can go, I believe, I am biased because it is my, they are my babies, but I believe there's way more movement on the upside than you can imagine.
Yeah, Up has done a 15x. Yeah, Up has done a 15x, and this one's done a 4x since they launched. So to Pulse compared to Pulse. So
and we're only sitting at 10 million or 15 million or somewhere around there. I haven't looked for a couple of days. 15 million and a $6 million market cap. And we're still young, we're still babies, and we have products like LPX coming out, LoanX coming out, and they are going to change the game. LPX is for any token. Eventually, it'll be for any token. At the beginning, there's version 1 and version 2. So version 1 would be selected pools, and version 2 would be you can just literally go to the front end and create your own pool, community pool, private pool, whatever you like.
What about an existing pool?
Sorry, yeah, that's going to be very interesting how people use that, because you also get a receipt token when you create a pool as well. So the game theory behind that could be, amazing. People might start, doing things with that. Imagine you were able to, you see how you get you start a V2 LP, you get a PLP token. You can't do much with that unless you can stake it and earn a incentive token, for example, right? But with LPX, you create the liquidity pool, you're getting a PRC20 token. So you can treat that as if it was any other token out there. So if you want to come and build on top and then utilize that and then find some game theory and how you can do things with that, come and use it, because you're getting a PRC20 token similar to the UPLS. It's a PRC20 token as well. And then go utilize that or do things with that. Maybe build another LPX pool with that and earn an additional yield, right? I don't know. People are going to find ways and experiment and find things that might be beneficial for doing something like that.
Right. That's very interesting. I wonder about the stable coins.
Yeah, that's deep in the weeds. Yeah, stable coins are going to be very interesting. But hey, for those people who are watching, listen, we got way too technical right there. You can go buy the Up and Up X token, and all these smart people talking will go do all that work
when
for
it
you.
comes to LPX, I get excited because it's a
Honded's
very
way
awesome
too
product.
excited about LPX.
I love it. I love it.
It is amazing.
Yeah, it probably is, like we're speaking a foreign language, but I mean, the more you want to learn and dig into these pulse chain opportunities, like there's really a lot of potential here, guys. I mean, I'm not saying like I actually don't own either token right now. I might buy a small bag. At the end of the day, yeah, I guess you're kind of relying on what, there's 7 or so developers that you have.
Yes.
Yep.
You're just relying on them being smarter than you.
Seven main developers. Yes.
Yeah. All right.
At Crypto Coffee, there's one problem though. If you buy a small bag,
What's that? It might turn into a big bag.
no, you're gonna wish you bought more. That is the only problem you're gonna have. No matter how big you buy, you're always gonna wish you bought more.
I understand it as leverage on PLS itself, so it's one of those things I haven't really. There's so many projects out there, but
The
this is one.
we've moved beyond that as well. We were just at one point we were leveraged on Pulse. If the price of Pulse goes up, there's vaults. As the price of Pulse goes down, new vaults open. But we moved beyond that now to perpetual buy and burn. So now we have both, and we're growing the perpetual buy and burn. In the next couple of months, the perpetual buy and burn is going to grow massively, and that's going to change the game itself. And I know I'm going to go back to LPX because it's my favorite thing in the world. If LPX was there from the start for PulseChain, these dumps that we've seen wouldn't be so hard if a lot of people were using LPX for Pulse to die, PulseX to die, and stuff like that, right? And Dave could also confirm this for me if he wanted to. But LPX helps the token that you're using or the token that you love the most in terms of when price dumps, it starts buying up with the DAI that it's accumulated for when the price does dump. And that's a beautiful thing. Like when you're a liquidity provider, you don't buy up anything. People buy you out, right? But with LPX, what it's doing is it's buying up when the price dumps, helping the price. And so instead of the price dropping 20%, it might only drop 12% because of LPX. So if LPX was there from the start for PulseChain and the price goes up and then someone dumps, the chart will look way more different than what it does look now.
Can we go over an example of that? Like I see there's a link to view the PulseX pulse pair. Is there anything you could show that's kind of working right now?
Because we haven't got like a PulseX. You can see the analytics of liquidity pools and the chart. We can't really show that because we haven't got a front end. It's all done through like numbers. I don't know if Dave can himself. Yeah, because he's the numbers guy.
I can pull it. Here's the address for a recent LPX, and you can see that there was a sell, there's a buy. So this address is doing what? Buying and selling, buying and selling. So every time the price dumps a little bit, and you're down here at 3.2, it's buying, and then it starts running 3.4, it starts selling a little bit, and then it starts climbing. It's like this is what you want to have happen, right? So we're still selling at 3.8, and then it's like, but wait. But yeah, that's because we were way up here at 389, but now it's starting to dump. So it's buying again, but now it's buying higher than it was before. So it keeps pushing the price higher and higher and higher. And that's the design of an LPX. It is selling. It's like, oh no, we're selling the token we love. Yeah, but what are you doing? You're stacking DAI so that you can come up here and buy again and support the price at a higher level. So that's the premise of an LPX. And then of course now look at the price; it's at 5.0, and so okay, we've got to start selling again a little bit. Start.
So it's not actually a PLP token.
No,
it's not actually a liquidity position. No. It's like an automated market maker bot kind of.
That's what it's doing. And it got up to 5.9, dropped back down to 5.7. It's like, we can't let this damn thing drop. Keep buying 5.7, 5.8, 5.1. We are helping the entire PulseChain market go higher through this. And if there were, a bigger pool of people doing this, then it's basically having this huge buy wall underneath the supporting price. And the buy wall keeps moving up as the price moves up.
And how does it ensure, like, I think you mentioned it's totally proprietary, right? Like you can't really give away the strategy here, or?
Yeah. There's some videos out there on YouTube. You can just go like, because these are basically done in traditional markets quite often. You call them market maker bots in traditional markets, and you can see the math that goes into building these bots. I have a degree in mathematics, taught it for 35 years, and I went through the math and it's like, they're talking about Poisson distributions. And I mean, there's some very crazy mathematics that they use to build these things. And our dev has built these, and we're going to public release them so that you can join these and become part of this. Because your stack was worth 35 cents each. And yeah, you may have lost some of your stack, but look what you've done to the price of the ones you have. You still have you may have less tokens, but now you've pushed the price up to 55. Or, and now here you are, you're going to try and support that price. You're going to make sure it doesn't go back down. And look at this. We made a big buy, we made another buy at 5.1. And then, of course, the price starts running, and we're buying again. We're currently buying on this LPX pair. We don't want the price to drop below 5.6, 5.8 right now. So you may have had some token loss, but the net asset value of that bag has grown greatly because of the use of LPX.
Yeah, and the more volatility there is, the better it is for the LPX as well. And also, just to note, right, the one stage, one of the LPX pools that I was looking at, the price ran up and it stacked 60K DAI, and you couldn't even tell on the chart that 60K was sold worth of this token. You couldn't tell on the chart. The way it sells very smartly on the way up. But when the price the price went down, you can actually tell on the chart it's buying, because it's more aggressive on the buy pressure than it is on the sell pressure.
Yeah, here's the pool he was talking about. There was a minute not too long ago where this was at 60,000 worth of DAI, and then evidently we had some sellers in UpX. There was some sell pressure, so they started buying it back up. We still have $7,000 of the buy pressure on our token, so that if somebody else does want to come in and start dumping, we buy it back up. And then as we maintain and stabilize the price, we will start selling a little bit of the UpX so that we can keep stacking more DAI so we can protect the price higher. So that's the basic design of an LPX, and you can go into the transaction page. By the way, everything we do in UpX is 100% transparent. You will be able to see every wallet we've ever touched with the sacrifice funds. This is a community project. This is not a founder project where, I'm traveling to Australia on your money. I haven't flown to Australia because price of Pulse hasn't pumped yet. I need Pulse to pump. I bought my UpX. I bought my Up. Nobody's giving me anything. But I believe in this project. So you can see that we're selling a little bit of, we're using our DAI and we're buying some UpX here. We sold some of our DAI, we bought some UpX, but then we turn around and we're selling a little UpX. So we're, stacking more DAI, so pushing that chart higher. That's the design of an LPX. And again, this has only been live for a few months. And if you look at our chart over the last couple of months, between this and the validator yield, it's up and to the right. And I wish we'd have had this from day one, but we didn't. It wasn't until we had a famous YouTuber come in and pump and dump our price where we said, okay, we got to do something to protect our chart because we don't want this to happen again.
Yeah. So are these the strategy here?
I'll just add one more kicker, right? For every buy pressure there is, 2.5% of that goes to buying and burning.
Yes, right. There's always that buy and burn, 2.5%. The strategy that's being run here, this is basically just a kind of a black box of just a market maker strategy.
Yes.
Well, it looks good so far.
Yeah, we are going to. We're like I said, we're on testnet right now, trying to figure out how we can allow myself, Haunted. I can't wait to put my money into an LPX. I keep telling the dev, will you make this damn thing hurry up? I want to invest in this because I see what it would do to a bag.
Do these strategies cost money, or like do these developers just have they developed them themselves?
Yes.
Okay.
They want PulseChain to win. They want you having your funds in an LPX, and it's like, well, what's it going to cost me? Nothing. It doesn't cost. We might take a small piece, like a small 1% of your profits and send it over to Up and UpX. Right. But we are not trying to fleece the community. I mean, loan alarm bot's free. We haven't made a token. There's not a token LPX like, oh, go buy this and give us your money. That's not why we're in PulseChain. We are trying to build tools for the community so that they can become wealthy. We want this chain to be as wealthy as Richard wants it to be.
I like it. I mean, I'd probably experiment, especially with LPX. Obviously, I mean, I think everyone's adults watching. You guys should know, don't bet your whole bag on anything. Don't invest more than you're willing to lose. But yeah, I'd probably want to be testing that strategy out.
There's yeah. So look at the things that we've built. You know, we're building a ValidatorX, which is, you know, use your pulse, make sure you know so you can earn a yield for yourself, right? And now and then we have LPX, which is, you know, utilizing those tokens that are just sitting dormant in your wallet and try to earn a yield also. And just so you know that you know, if you look at LPX, right, the impermanent loss in LPX is very minimal, if any, and sometimes at a gain. And impermanent gains, that word is never heard of in crypto. It's very rarely said. And with LPX, I can the pool that I've been looking at, the upex and die, at some points there is an impermanent gain.
What if there's too much money in like an LPX particular pool? Does it throw the strategy off?
No, because it's just the way it works, is the way the math works.
Well, here's the beauty. Once it goes public, we're going to have multiple LPXs with the same pool. And so then the market makers are working against each other. And so that just pushes the price even higher. Because if you go to when we have the public LPX and you, let's say you want to make a hex die pair, and then I come in and I want to make a hex die pair. I don't join your pool. I can make my own pool. And now we both got them. And so when the price drops on yours chart, maybe yours buys and it pushes it up, and then mine buys. And then it's like the price just runs through the freaking roof.
Sounds good. I mean, it almost sounds too good to be true, but
that's why Haunted's been very, very excited about LPX. We definitely want to see this on the market and see what it does. Because theory is one thing.
How long has it been working for already?
On privately, we've been using it privately on mainnet for 3 months. Well, on our 3rd month, I believe.
Okay, so it's been working even in a downturn.
Yes. Yep. Yeah. You look at our chart during this downturn. You know, Pulse is at half sack rate, and our chart's looking freaking. We're at 4-to-1 ratio. I mean, upex has done great.
Yeah, upex is like, yeah. I'm too excited. I think we should move on from this topic. I'm too excited. If I keep talking about LPX.
Yeah, this is supposed to be a ValidatorX show.
For days.
Yeah, this is a ValidatorX show. Hey guys, look, we launched a new validator during this conversation. Right here's our page where all the deposits. You know, somebody deposited a couple million, and it's like, boom, another validator got sent. I mean,
I ran the number on ValidatorX, 1 billion pulse, and you're making roughly around, I think it was $17-18 every second day, and that's something that you didn't have. You know, and let's say you only have like 100 mil, 200 mil, you're still going to earn more pulse, and that's pulse that you didn't have. Versus someone that didn't hold any pulse, if you're holding liquid, you're not doing anything with it. You know, you're being diluted by the people who are being validators, and the more people who are becoming validators, that yield sort of spreads out to more wallets. So it's not just going to, like, you know, the selected few. Now it's going to the many, and that extra yield that PulseChain is getting, or the validators that are giving out that inflation, is now going to more wallets, and that's what you want to see. The more people who get it, the better it is for the whole ecosystem.
Yeah.
Okay.
All right.
Very interesting, guys.
Yeah.
I mean, I will be experimenting with this. Yeah. I will be probably experimenting with the LPX stuff, maybe even the validator stuff. And it's up to everybody to decide if they want to or not. But if you guys want to learn more about this, t.me/UPABNS. Yep. That's t.me/UPABNS stands for up, always buying, never selling.
That's it.
Great
At the time,
acronym.
I couldn't find the channel. I couldn't find a name for the channel. Like I put up and I put up up token, and they were all taken. So I just said, you know what, always buying, never selling. ABNS.
Well,
so that
That's it.
Not my greatest moment of life, but you know, it is what it is.
Yeah, I'll say thank you again. Let's see if we can end this stream before an hour ticks
over.
We're
at about an hour. I think look, this is the kind of stuff that interests me. I like that what you're doing is what would you call it? Altruistic, right? You're not just taking any fees at all, really. It's all just going back to the up token. I've never heard of developers doing so much work for free, all you guys. So thanks. Everybody takes their own responsibility, pressing the buy or sell button or trusting these guys to run the strategies correctly. But I really like it. And this, I mean, look, if meme coins are your thing, have fun with that too. But I think that stuff like this helps grow PulseChain at a pretty large scale when you actually understand it. So Thank you, guys.
I appreciate you. Thank you so much.
Thank you very much. And just remember, we're a believer, and most people should be a believer of. You should be free to do whatever you want with your own money. So decide yourself, educate yourself, and do whatever you like with your own money.
Right. Couldn't agree more. PlusX.app. PlusX.app. I'll put that link in the description. See you guys on the next one.
Up into the X's.